Good morning, traders, and welcome to Premarket Info. I'm Dennis Dick. On today's show, tight ranges in the S&P have continued all last week. We are tight here again this morning, and the top components have exhibited very tight ranges as well, which have led to some key technical formations in some of your stocks like General Electric and ExxonMobil, where we're seeing double tops and triple tops and double bottoms and triple bottoms. We'll look at all these key technical formations. Coca-Cola has split the stock this morning, and Goldman Sachs is downgrading it. We are going to see upgrades to Google, International Paper, and Campbell's Soup today. And retailers reporting tomorrow, we've got Home Depot, Dick's Sporting Goods, and TJX. The market has been in a very tight range here last week, the tightest we've seen in a long time. You're looking at a 5-day chart of the E-mini S&P futures. 1387 has been the bottom of this range, and 1403.75 has really been the top. We got up to 1404 this morning, but we're just pulled back a little bit here, trading at 1402. So your key support, key resistance is definitely well defined. We got down on Friday to 1392, and then we rallied all afternoon to close actually up on the day. So again, though, we're seeing 1, 2, 3, 4 highs right up here in this 1403, 1404 area. So that's still going to be technical resistance until we can start to get above that. If we do break above that area, eventually we may go up there and actually test this 1413.75 area that we've been talking about for a while, which is your 52-week high. Lots of stocks in the news here today, but first we're going to just explore some of your Big Ten, because we've got some key technical formations to look at. Starting with ExxonMobil, where we've had actually a triple top put into place here. 88.50 was the high on Wednesday, 88.48 was the high on Thursday, and 88.48 was the high on Friday, closing right up there. It's trading at 88.30 right now, so just down about 20 cents. So that triple top is still intact here. If we start to go above there, that 88.50 area, we've talked about some institutional selling pressure there, and I think that's what's holding it down, where you see these high frequency traders, they like to lean in front of the institutional sellers, and we've been saying it on the show for 2 or 3 days now that you're probably going to see some high frequency resistance in this whole 88.45 to 88.49 area as those high frequency guys continue to lean on the sellers at 88.50. So, and that's what we've seen again on Friday as the stock did run up. It actually ended up being down early on, but then continued to run up and got right into that high frequency resistance, and then actually closed up there. I do have a trading position on an ExxonMobil for full disclosure. General Electric is another one that's exhibited some nice technical formations. We've seen a double top up here in this whole 2110 to 2112 area, but even looking farther out, 2118, 2119, so you can call this whole area has started to become pretty major resistance here. I'll call the whole area 2115 to 2120. We actually see some institutional resistance up at 2120 as well, meaning the high frequency guys are alerted to this, and they're probably still beyond the sell button between 2115 and 2119. For this stock to start to break out, it needs to get above 21 and a quarter. Otherwise, the play still looks like to be from the short side. Johnson & Johnson, looking the other way, has actually had a quadruple bottom here. If we just look at last week's chart here, you can see this whole 68.13, 68.25 area has given you 68.22, 68.25, 68.13 I think is the low, 68.12. So you've seen quite a few bottoms here just in this whole low 68 area. So whenever you see something like that, obviously you've got some type of accumulation happening. Either it's a major institution accumulating stock there, or it's high frequency traders who are just putting in a low, a bottom there, and they continue to buy on the technical formation. But whatever the case may be, 68, that whole 68.12 to 68.20 area has given you major support. So if the stock pulls back there again, I'd expect to find buyers probably the 5th time. If the stock starts to go in rally mode, we have found sellers up here before in this whole 69.75 area, so that's still going to be technical resistance. But that's $1 up from here, so I'm not sure if we'll see that today. AT&T is another one that's formed a triple bottom here. Between the low on Wednesday, was, I'm just going to grab it here for you, 37.03. The low on Thursday, 37.05, and the low on Friday, 37.04. So you can call that a triple bottom right there put into place. The stock actually, if we go out to the daily, you can see it a little bit more in detail here. It did start to bounce up and is finding some resistance in this 37.50 area. If we can start to get above there, I think this thing can make a run for the $38 area again, where we topped out there just a few days ago. But right now, still keep playing this support down in the low 37s and pretty decent resistance up in the high 37s. Another one is Microsoft. It made a double top there. Lots of double tops and double bottoms. These are key formations because a lot of technical traders look at these as possible reversal signs. So that's why we like to highlight the potential double tops and double bottoms early, which is what I'm doing for you here today on the show. We had a potential double top put into place in Microsoft on Thursday and Friday. Thursday's high was 30.65 and Friday's high was 30.62. Microsoft trading down just on 100 shares so far this morning, 30.45. So it is below that area, so that potential double top is in place. Obviously, if it starts to trade above there, then it could maybe make a run for this high we set back on the 20th of July, which was 31.05. All kinds of them. I'm just going to keep going through them here. Pfizer, and it's because these tight ranges, so you do end up getting double tops, triple bottoms because of these tight ranges. And Pfizer is the same story. We've actually got this quadruple bottom thing happening here on Pfizer, where we've bottomed multiple times in this 2370 to 2375 area. So obviously some accumulation going on down here. If the stock pulls back, it's trading 2388 right now, but pulls back into this area, I'd expect to find buyers for the 5th day in a row. Until that support is breached and it starts to trade below the 2370 area, the play continues to be to buy it in the low 2370s. One more here. Wells Fargo actually looks like, and I'm going to give you the daily just so you can see it better. We had a triple top here right around this whole 34 key area. 33.95 was the high on Wednesday. 33.98, I believe it is, was the high on Thursday, and then 33.95 was the high on Friday. So we'll call that area a triple top. After that area had given support, it's become classic resistance. So the last 5 days, this is really set up as an interesting trade where you had this whole support area before is now becoming resistance. If we just draw it on the chart, I'll just try to draw it for you there. Well, I didn't draw it very straight, but you can see what I'm talking about, where this was support, and now these areas become resistance. So, gets back up to here, it might find sellers again. So you really want to note, for you technical traders out there, and the short-term traders, when there's these triple tops and triple bottoms, because other traders are looking at this stuff, and other institutions and bigger players, and high-frequency traders for that matter, are looking at these formations too. So you need to be aware, if you're trading these stocks, where these formations are, and the potentially reverse when there's a double top or triple top. Lots of news here today. We talked Coca-Cola actually split their stock here this morning. My chart's not updated here, so it's a little difficult, but it's actually trading down on the post-split price at $39.25. And the post-split close, if you divide that in half, because you have to divide it in half, $39.37. So that is the new post-split close. If you look at it, it's trading down here right now, $39.25. Trading down because Goldman Sachs has actually downgraded the stock today. So that's why it's down about 12 cents here in the pre-market. Obviously, the volatility is going to be quite a bit less now that Coke is only a $39 stock. But keep in mind this whole $76 area where we found support before. So if you look at that, that would be split in half. Doing the math quick would be about 38 bucks. So looking at that, that could give you some support here, but that's quite a bit of ways away from where we're trading at right now. So I just keep an eye on this. $39.25 is where it's been trading. Probably your first area of support. Look at the whole numbers a little bit. $39 might give you some. But these defensive stocks have actually been starting to break down. Like Coca-Cola had topped out here. We talked about it. And it had been out of favor for 3 or 4 days. Obviously, it's split now. So you might see some people, oh, I didn't like it and buying $78, but I don't mind buying $39. I mean, it's still buying the same amount. But with Goldman Sachs downgrading it today, I'd expect Coca-Cola to still be weak. Sears Holdings is getting an upgrade from, oh no, actually Sears has just got an article in Barron's actually this morning here. They were citing that Sears obviously has had lots of trouble here lately, but they were saying that in a potential liquidation, this stock could be worth a lot of money. So if they slowly start to liquidate just because of some of their real estate assets and some of their other assets, that this stock could actually be worth some money. So that's why it's getting a lift here this morning. The stock is actually up $3.83, trading at 55 and a quarter. If you look back here, we always like to look at where the old highs and old lows were because there's lots of reference points, which means lots of people have positions on from these points they may be looking to get out. So if you were, buying it up here in this whole 54, 55 area, you're getting a nice chance this morning to get out of it. Another thing here is it always seems like these stocks, these weaker stocks, when they get a lift on some type of news or some type of article or some types of an upgrade, it seems like sellers always come in. So I wouldn't be surprised if Sears Holdings was the same thing and started to find sellers again. I think you might find some initial selling pressure from the high we seen on July 17th at 55.50. We also had the next trading day on July 18th had a high of 55.29. So we are seeing a little bit of resistance just up here this morning as the stock has kind of been popping and trading around that 55 and a quarter area. So I'd keep an eye on that area. If it does start to get above there though, you can see we moved down quickly here, so there's not a lot of reference points above 55.50. So I'd be a little bit nervous if I was short the stock above 55.50. Google getting an upgrade at Morgan Stanley here today. Google actually trading up significantly on this, $649.77. So Google's up over 7 points here this morning. We go back to the 6th, the high was $649.38. So we are right there right now. So if the run continues, and Google has been on a heck of a run here for about a month, if the run continues and starts to get above there, then it starts to open up again. But that might be your first reference point. A lot of people like to trade Apple with Google. I don't know why, but the stocks tend to follow well. Aside from last week where Apple had a very, very tight range, Google actually was moving up still. So, well, Google's actually pretty tight too. So Apple actually here trading up 2 or 3 points, I think probably in sympathy because some people like to trade this Google with Apple. It is trading up here 3 points this morning, so I would keep an eye on these highs that we set last week. If I go to the daily, you can see up here, every time we got in this high 624 area, we were finding some resistance. We look like we might open right up into that. Now I'm a little nervous to short the stock here just off the open just because Google is up 7 or 8 points, and sometimes you get those Google Apple pair traders. Again, I don't know why they pair it, but they do. If you look at the charts, there's definitely a correlation between Google and Apple. With Google up so much today, that might drive Apple higher. But if you are trading Apple, I would keep an eye on Google because Google could actually be your leader here today. Campbell's Soup getting an upgrade at Goldman Sachs. Goldman Sachs a little bit busy this morning, I guess. We look at Campbell's Soup though, multiple highs in this 33.50 area. It's kind of crazy. 1, 2, 3, 4, 5. We are trading significantly above there this morning at 33.89. So I think on a pullback, if this thing is to pull back today, I think you'll find some decent support, maybe where this old resistance was in this 33.50 area. If the stock continues to go into rally mode, you had multiple highs in this 34.55 to 34.57 area in the middle of May. So I would say if the stock moves up 50-60 cents from here, that's where you're going to find some significant resistance. So basically your support I would define down here probably in the 33.50 area, the resistance up here in the 34.50 area. So we're trading at 33.89, we're kind of stuck in the middle right now. 34 will probably give you a little bit of initial resistance. Some institutions probably selling there a little bit because it hasn't been up there for about 3 months. But if it starts to break above there, 34.50 would be your next major resistance area. International Paper getting an upgrade at Credit Suisse here this morning. Also interesting because International Paper went ex-dividend on yesterday or on Friday. I'm sorry. Actually, this morning it went ex-dividend. 26 cents was the ex-dividend amount. So you need to adjust the close. The close was not 32.89. The adjusted close is 32.62. So with International Paper trading up at 33.08, actually bid at 33.16, it's set to open quite a bit higher here post-dividend with the Goldman Sachs upgrade. Multiple highs up here, double top basically in the 33.63 to 33.66 area. I think that'll be your first major area of resistance if the stock runs. Gets above there, then you could look up here to where we had a top back in April at 34.32. So above 33.60, there's not a heck of a lot. Probably some at the whole number 34, but not really a heck of a lot on the charts until you get to the 34.32 area. Got a lot of retailers reporting here tomorrow, and I just want to highlight a few of them for you. Home Depot is one. Obviously a stock that's traded quite heavily. 53.48, just 300 shares here traded. Looks like just a one-shot deal because the stock's actually offered down at 53.33. So not a lot of action here this morning, but sometimes you do see these stocks run up ahead into earnings. Home Depot reporting tomorrow morning, so don't be surprised if you see a little bit of relative strength in a stock like Home Depot here today as they're reporting tomorrow. Obviously the 54 is still a big bogey number here, and you got the 54.28 July 27th high, which is definitely going to draw in some sellers up there if it's to get back up to that area. From support, you can look down here and you got pretty decent support down here in 52, but that's over $1 away. With the tight range the market's been exhibiting, I don't think you'll see that today, but tomorrow off the earnings report, if you're trading it, that's where you may find some initial support. Obviously, technicals take a back seat when fundamentals are in play here. So, if the report's really, really bad, then you gotta just sit back and let whatever happens happen. But that 52 area could provide you some initial support tomorrow morning. Dick's Sporting Goods going to report tomorrow morning as well. There's lots of retailers actually reporting this week. Just the other ones, Estee Lauder's reporting tomorrow morning, and TJX reporting as well. But just taking a look here at the Dick's, we've come down here. We've basically topped out here a few days in a row up in this 52 area, and we've pulled back. Just kind of, in the middle of this whole area, this whole range here right now, this $50 area. The stock is bid up a little bit here this morning, 50-50. So again, sometimes you see these stocks move up ahead of earnings. So keep that in mind if you're trading these retailers here today. Estee Lauder, the other one, which is actually looking pretty nice on the chart. It's right here up in this whole resistance area. But if it can start to break up, you get into this whole area where we really ran down quickly. So you can move back up quickly through this area. So if Estee Lauder has a really good report tomorrow, there isn't a heck of a lot above 57.01 until you get into the 60 area. So you can look at that area as a potential move if the stock has really good earnings. Again, keep an eye on the earnings because that is what's going to drive these stocks tomorrow. Getting back to the market here, the market has been so tight this week. I don't know when we're going to break out. We've basically had 6 days of ridiculous tight ranges here. Again, you've just got to keep playing the levels though. We've highlighted here for you on the charts. I'm going to just reiterate it to you one more time. This 1403 to 1404 area has been finding sellers, and we've been finding buyers in the low 1390s. So until we can get out of this whole channel here that we're trading in, I would continue to play from the short side up here and the long side down in the low 1390s. We get above 1404, start trading 1405. That's when I'd get nervous, and we could see a run up to the 52-week high in that 1413.75 area. Once again, I'm Dennis Dick for premarketinfo.com.